Okay, so back to this tutorial. This is a correction wave coming down, and then for the BPO structure we have identified, it is expected in our entry projection that when the market breaks the TL, it's going to reverse, first of all, to recover all the move of the correction, which means you have not missed anything. By the time the price gets to the ISL, then the rule says that after hitting the ISL, the market will double the move it has made for that recovery of correction. So if correction was 200 pips of impulse or above, the market will have to make what? A total of 400 pips. So you can project a 400 pips move. It may not happen in one impulse, it may happen in a series of impulsive moves, but the market will always do that before returning back to your entry level. And that is why it is your biggest profit opportunity. When you identify this structure called the BPO structure, used as a reversal pattern. So this is the first example from ISL at 2327 to a new low at 2303, while the TCL or TL at 2306 show that the market exceeded what? 200 pips, okay, from ISL to TCL, which means that this fulfills the structure expected for the BPO observation done here. Now, when the market comes back to enter into the expansion zone, which means it breaks the TCL and goes into the expansion zone of 30 pips but does not break the expansion limit, the market was expected to reverse back, and that is your fast reversal entry. You could take it as soon as the market gets to the expansion limit here, which we said is a quick entry in our previous tutorial, that when the market gets to either a deviation limit or an expansion limit, you can take a quick entry immediately market gets there. While that is entry one, fastest on market execution, then you have the second entry, which is the main entry at the TL or the TCL broken initially, and that is at 1 pip above the level broken. So this is the first structure. And what did the market do? Having given you your entry at 2306.02, the market goes first to the ISL with this candle, breaks the ISL, and then returns back to retest the previous SBL level that was formed and marked here. This was the previous SBL level that was marked. That's with this G2 event, the SBL level was marked here, and ever since then, the SBL level that was supposed to go for its own deviation limit before indicating a buy was not traded fully because its deviation limit stood at 2330, which you can see that the market did not get there fully, 2330.13. So this was the first time the market attempted to break the 2330 level and rejected it. So this rejection that happened here after the ISL had been broken for this reversal move triggered the market to correct downward again, and that was a short one which ended this first impulse. So this first impulse was terminated because of the deviation limit of the previous G2+1 SBL. Okay, and that is what the level we see the market now, having rejected its limit, came back down to the level, retested the level, could not break the level, and sprang from there to complete the move for the BPO structure. So rising all the way from 2327, the market makes another 200 and above. Okay, so approximately 250 pips move, which if you add them all up, that's 400 pips move on this structure. So if you can identify this structure and take your entry at the earliest entry opportunity, you're going to be in for a big profit opportunity. So let's look again when we saw this structure play out again. So here again, we mark the next structure that played out. This was a correction. There was no immediate impulse corrected. but there was a previous impulse that had been corrected, not up to 200 pips. So this was a correction that happened. And if you measure the correction starting from 2341, the market attempted to come 200 pips here, shy by just 10 pips. It stopped at 2322 instead of 2321. So that was, first of all, the full move. Then its TL stood at 2324. Then market entered into its expansion limit, and let's see what that measured. 2324, the market exceeded the expansion limit, in this case, a false show of potential to break and continue moving downward. But after the initial break, the market quickly reversed back into that move. So this was a power move down. Now, your first entry would have been at the TL, which is expected since the trend is bullish, and that's at 24.71. So 1 pip above the TL. And then what do you expect from that afterwards? Following the TL structure, following the BPO structure, you expect the market to do a full recovery of the correction, okay? And after doing the full recovery, you expect the market to do what next? You expect the market to exceed and double that full move of correction. So which means that if you miss the correction move, for which case we say that you don't even bother about catching the correction move, because it's not your interest to trade against the trend. So when the correction happens and completes, your interest is to trade the reversal back into trend. And that is why this is corresponding with reversal pattern trading. So when the market has returned to the ISL, you expect the move to continue and double the full move of the correction. So if the correction here was about 190 pips, almost 200 pips, it means the market needs to make over 300 and what? 80 pips, getting up to 400 pips again. So far, what has the market done? Let's look at it. The new ISL is at 2341. So let's see where the market heads. The market goes above 2341 by the first 80 pips, okay, which means that the move to the upside is not complete. From 2341, add 20 pips to that, that should be 2361. So this market is expected to make the move all the way up to 2361, and that is because you are basing it on the BPO structure, so which is the biggest profit opportunity structure for trading reversal patterns. If you can follow this and trade it consecutively or consistently, you are in for big profits. You are in for big profits. And that is the importance of following the rule. Find the entry based on the, find the entry based on a correction that makes 200 pips of impulsive move. A correction that makes 200 pips of impulsive move, and you trade a reversal back into trend at the end of that correction. When the market, of course, must have either broken the TCL or the TL by the first 10 pips. You take your entry as a stop order. In this case, in a bearish correction, your entry will be a bullish entry, while in a bullish correction, your entry will be in a bearish. Okay, your entry will be for bearish in a bullish correction. So always identify the trend, which is the starting point. So if we look back also, this structure, we can mark it at previous time. It's very easy to identify. All you need to do is know the direction of trend, then look for the correction that exceeded 200 pips, and you can track what happened afterwards. So here we had a correction measuring from 2286 all the way to 2268. Then the TL stood at 2267. So this is again about 190, okay, 190 pips, telling you that this is about the same thing that happened there. So if